Awesome. Hey, Ryan, I'm really excited. We're having this chat. We have quite a lot of stuff that I would love to discuss, but I'll let you take this off. Maybe, do you want to share with us how did you get actually involved in Dash? What did you do prior? How did you meet? I'm not sure when you actually met Evan and discussed a lot of those things. What was your kind of journey into all this? And then we're going to take it off from there. What's current development at Dash at the moment?
Sure, happy to. Um, I first got involved in cryptocurrency in 2013. Um, my own background is in traditional financial services. I've been a consultant for McKinsey and Company, where I served a lot of the largest financial institutions on a variety of different topics. And then I was with a hedge fund where I conducted a lot of the research for their fintech and um, payments companies that they were investing in. And so I was bringing a very payments focused lens to cryptocurrency when I first started investigating it. And it became apparent to me pretty quickly that Bitcoin has some flaws when it comes to a payments technology. And I had
Did you
some.
did you already see those flaws back then, or were you drawn into all the hype and all the like positivity around Bitcoin back then?
Well, I was certainly drawn in by the positivity and hype, and I was reading a lot about it in payments press. A lot of the payments press that was out at the time was very deeply skeptical of Bitcoin, but I was intrigued enough to get interested in it. From a payments perspective, I did recognize that there were flaws, both in the adoption methods that were being used as well as the technology itself. And so I started looking around at the space and discovered that there were actually more coins than just Bitcoin, which was getting the bulk of the press at the time. And I discovered that most coins were simply copies and pastes of Bitcoin, and maybe a change in the algorithms that underlie the code, or
Number
maybe a
of
different
coins.
total, yeah, different number of coins or something. But they all fundamentally worked the same way, and they all copied and pasted basically what Bitcoin was doing. And I was attracted to projects that were doing something different, things like proof of stake,
Yeah,
which was under the hood for what most
really
people would.
early, really early. I
Yeah.
mean, you guys were the first one. I don't know actually who coined the term, but weren't you guys the first one who coined the term masternode? Like this idea of having something like this?
Yes, Dash was the first to introduce the concept of a master node,
I
or
remember
any
that.
type of,
Mm.
tiered network that had differentiated nodes. And so it was introducing those innovations, but they had a purpose. They weren't just there uh, to do nothing. What they had in mind at that time was to introduce new functionality that coins couldn't do without them.
Mhm.
And specifically, the problem that masternodes solve is, number one, it provides a high quality infrastructure for the network, one that is paid for, not run off Raspberry Pis, but actual infrastructure that people are willing to spend some money on. And the second thing that it provides to the network, at least initially, was the ability to prove that that layer of the network was widely distributed. Uh, you can't just spin up a masternode. You have to prove ownership of 1,000 Dash. And that basically prevents any one person from basically controlling a large portion of the
What
network.
is the reason for the 1000? Because when I got started, I got started in crypto in 2014. I think Dash was on my radar probably 2016. And there, obviously, getting a masternode, I mean, it was really doable for pretty much everyone. I think
Mm-hmm.
Dash at that point was a couple of dollars, so it was doable. I mean, today for the average investor, I mean, one of the reasons there are so many staking pools, for example, is because it's getting quite tough. But what was the reason for the 1000? Was that just the magical number?
Well, I wasn't around when the 1,000 was chosen, but I
Okay.
have had conversations with Evan, who was the lead developer at the time, and he was simply looking for a number that would target a reasonably large number of master nodes without overburdening the network with
Okay.
a huge infrastructure that actually would slow things down. So it's balancing the need for decentralization, having lots of them, and we do. We have around 4,900 of them today, with the need for a speedy, robust network. And if we had tens of thousands of nodes, it would simply take much longer for messages to propagate across the network, and it would slow the network down. That would actually be detrimental to the average user. And so 1,000 was kind of a good stab in the dark as to where that might land the network. If it only required 10 dash, the network would be
Sure.
much larger and
Yeah.
would be less effective. If it were a lot larger, we probably wouldn't be quite as decentralized.
True.
So it's balancing those needs.
Quite some foresight though, because I mean, yes, today, like at the moment, Dash is around $80, but so let's say it's $100,000. Quite some foresight though, because I mean, back then, in theory, a lot of people could have used it. So obviously, there was quite some foresight actually.
Yeah, yeah, and denominating that in Dash made the upper limit on the size of the network determined by the number of coins, and so I think it really was a genius move. What I think Evan discovered very quickly is that the Masternode network can be used for a lot of different things. We use it for preventing 51% attacks. We use it for locking transactions very quickly. Basically,
how do you use it for the 51% attacks? How does that work?
Well, in our most recent version, we introduced an innovation called chain locks.
Mm-hmm.
They do what they sound like. They basically lock the chain tip, and they prevent any new chain from being introduced to the network that would cause a reorganization. And so it prevents not just 51% attacks, but unintentional reorganizations as well. And the way that it works...
Yeah, sorry, I wanted to know. Sorry.
Yeah, the way that it works is on a periodic basis, a quorum is formed of masternodes. And what a quorum is just a random selection of them. For chain locks, the quorum size is 400. And so on a periodic basis, a quorum of 400 randomly but deterministically determined masternodes are selected by the network. And those 400 then get to vote on the chain tip. If the supermajority of those masternodes in the quorum make the decision to lock a chain tip, they broadcast a special message out to the network that locks that chain tip at that block height.
Oh, wow,
and now the entire network knows to reject any competing block at that chain tip. The way that Bitcoin works
what is the supermajority? Is that 51%, or what's the percentage of the 400?
It's 60.
60.
It's 60%. Okay. So you need about 240 of
the
400.
Why 60? Is that a game theoretical, or was it just not, let's pick something but slightly more than 51?
Well, we wanted more than 51 because there is some noise within the 400 who are randomly selected. And so if an attacker were to control a large number of those, which is very unlikely, by the way. I mean, it would cost hundreds of millions of dollars to do that. But it basically is a threshold that ensures that far more than 50% of the masternodes saw that block first.
Okay. Mm-hmm.
If you choose 51%, it's kind of too close to that 50-50 number.
Sure.
And some random noise in just the 400 you happen to pick.
Got it.
Saw a particular block first or second, it might introduce some false positives. So really the 60% is a threshold that is mathematically impossible, that if a particular block was not seen by the majority of the network first, it could not obtain the chain lock.
Okay.
And so basically it brings clarity to which block a network is seeing first. Whereas in Bitcoin, a particular node can only see the nodes that it's connected to. It can't see the entire network.
Yeah,
it can't know that a particular chain tip is the chain tip. And that's why it requires multiple confirmations on Bitcoin's network to gain that level of certainty that I'm on the correct chain. And in basically these chain locks solve that problem. You don't have
How
to
often do you do them?
every block.
Oh, every block. Okay, wow. Okay.
And it only takes about 4 to 6 seconds to reach that level of certainty. A level of certainty that even isn't there with 6 Bitcoin confirmations, which
Just
take
for
an
everyone,
hour.
a block in Dash is 2.5 minutes, right?
It's approximately 2.5 minutes.
Okay.
It's a little bit more than that.
It just takes a couple of seconds, make the chain lock, and then basically everyone knows, hey, I'm on the right chain. Double spend is pretty much, impossible. Or
That's
very
right.
unlikely, yeah.
And that's in addition to instant send, which locks individual transactions in a very similar method. The only difference is that the quorum sizes are much smaller.
How are the quorum sizes on instant send?
Instant send is 30. And
30.
so 30 randomly selected masternodes. And again, it requires that 60% threshold. And so that prevents double spend of any one transaction.
Do masternodes get any extra incentive, or is that just part of their entire incentive as being a masternode? Or is there any extra incentive there?
There is incentive. The masternodes are paid for their services if they continue to service the network on a continuous basis. It's basically a round-robin payment system. Every single block, a masternode is paid for their service. And if at any point a masternode stops providing these services, they drop out of the payment queue and drop all the way to the back. And so they are incentivized to have highly robust data center hosted servers in order to ensure that they have no outages. A single outage can cost, $100, $150 to the master.
We know. So now it's key. Have you ever thought about cutting down on the proof of work and moving way more into pure staking? Because at the moment, I mean, you've kept the distribution of the rewards. I think it's 45, 45, and 10 for the DAO, right?
Correct. 45% goes to the miners, 45% to the masternodes, and 10% to the DAO. I think it's a really interesting question because it's a bit like when you have a password to log into a website and the website introduces password and two-factor authentication. It becomes much, much, much harder for an attacker to get into that website. And the question is, do you need as complex of a password if that is the case? Mm-hmm. And so I think there is a question of how much hash rate should the network be paying for? Because it's an expense. It's an expense to the network. It's an expense to the user because ultimately that Dash has to be liquidated on the open market. I think that the network could be made more efficient with a different allocation. I think we need to research what a correct allocation is because chain locks are not certainty. At the end of the day, proof of work is the fallback mechanism if chain locks were to ever fail. And so I don't think you can do away with it entirely. I also think there's a fairness issue here. Our miners have invested in equipment that is expected to last 2 years. And when they made that capital investment, we had an implicit promise to them about what allocation they might expect. And so I think to the extent that we do make changes, it should be done in a way that is very transparent and fair and gives advance warning so that people can make appropriate capital allocation decisions on that mining equipment. And so if we were to do a reallocation, it should come with 2 years warning.
How would such a reallocation work? Like how would the governance on that work? I mean, I would assume it would require a hard fork. And then, so how would that proceed?
Well, in the case of Dash, we have kind of like a checks and balances system between the miners and the masternode operators. Miners produce the blocks and essentially the masternodes validate them and allow them to be added to the chain through a chain lock. And so I think that the way such an introduction would take place is the software code would be rewritten. The protocol would be changed or set of rules that underlie the network would be changed, and would say that in order for a block to be valid 2 years in the future from now, it would need to have a 50% allocation to master nodes, and some other change that would need to be made. That version of the software would have to be adopted by the network. Ultimately, I believe it would just have to be the master nodes that would approve that change. And at that point in time, if a miner were to produce a block that didn't conform to that, the master node layer of the network would reject the block. And I think, therefore, the incentive for the miner is, well, I better not produce a block that doesn't conform to the rules. And so I think we've got the balance there to make such a change happen. Dash also introduced sporks, which is a technology that allows us to go through a hard fork, but in a controlled fashion.
Like a mix between a spoon and a fork.
Exactly. It's a soft fork, and or a softer fork. And it allows us to basically trigger a change when a certain level of adoption has taken place of a certain version of the software. And so it allows us to go through these hard forks in very controlled fashion. That's allowed us to introduce new features very quickly. So I think we have mechanisms that would allow such a change to take place. I think there's a lot of debate to be had, though. And I think if we're going to make a change of that magnitude to the protocol itself, that would need to go through a vote.
Oh, for sure, because you're gonna have a lot of outcry for sure as well, also from the miners, understandably. Yeah.
But I do think that it can be beneficial to the miners. Think about it. If you are a miner today and you're operating very expensive equipment, you already expect that new equipment is going to be released that's more efficient and will slowly crowd out the profitability of your machine. If we were to introduce a change like this that would reduce the miner allocation in the future, you think that would be bad for miners, but I don't believe that to be the case. Why? Well, the incentive to go out and buy new equipment suddenly starts to drop, especially as you approach that date. And what that means is the equipment that they've already invested in becomes more valuable. Sure. Because it isn't going to face that same stiff competition that they were forecasting. They can actually earn an excessive return for the next 2 years while that date approaches. And at that date and time, they have the ability to make appropriate capital allocation decisions. At that point in time, they may choose to allocate far less towards equipment because, the rewards are just going to be lower. And so I don't think it's as straightforward as, well, all else being equal, I'd rather get paid more in the future. The truth is, others' behaviors change as a result of that. And they can actually draw out some excessive returns in the meantime. So our current miners could actually benefit from a reduction forecasted in the future. Obviously, if we were to implement that tomorrow, it would be detrimental to them. But with appropriate notice, it can actually benefit even them.
Do you want to make any announcements here?
No. These are just ideas at this point, obviously. But I think a more formal case would need to be explored and presented to the community. But there are ideas here worth exploring. I think certainly it begs the question that you asked, which is, does it make sense to keep allocating the same allocation after chain locks are in place? And I suspect the answer is no.
Okay. Interesting. How do you see staking in general? Do you think there can be staking, proof of stake as a consensus algorithm with very similar security mechanisms as proof of work? I mean, one thing that's undeniable is once you burn this electricity, it's burned, right? So the proof that you're making here is very straightforward. I'm a big fan of proof of stake, right? Otherwise, part of our company wouldn't go into this direction. But so obviously, one question I always have is, will proof of stake at some point actually get to this level of security as we have in proof of work today?
Well, I think that there are unique attributes to proof of work in terms of the entropy that you get out of the system, the randomness
Yeah.
that gets generated in that process. And that is useful in a network that relies on the hashes of previous blocks in order to make decisions on the network. And so there is a safety to it. It's also economically very expensive.
True.
The network expends tremendous resources on electricity, on equipment, on oversight, management, people costs, real estate, racks,
Yeah.
everything that goes into the expenses that they incur. Almost all of what gets allocated towards mining needs to be liquidated to pay all of those expenses. And it's a drag on the price. And so I think that there is enough economic benefit there to try to make it work. In combination with chain locks, I don't know the answer. Like I said, I think there needs to be more exploration of the options available to us. It could be a combination of, or it could be lowering the amount allocated towards proof of work. It could be a shift towards proof of stake. It could be a lot of different things. Any changes we do make are going to be off into the future, because I really do believe in being fair to the miners that have invested in our network, and making sure that whatever solution we come up with benefits them too, like I just described. I really would like the entire network to want to move forward together. And so I think there are ways to do it. It's going to take a concerted effort and a lot of research and laying out the options and weighing the pros and cons of each. Security is one aspect of it. The cost of operations is one aspect of it. And these are very complex issues, obviously.
You mentioned governance a bit, checks and balances. I would love to kind of explore this a bit. How is this structured in the entire Dash group, if you want to call it? I mean, one thing I think in 2017, don't pin me down on the date, I think you dropped the foundation, right? So the Dash Foundation, I think, was dropped. Now, basically, it is an LLC as far as I understand. You are the CEO of that LLC. How does governance work here? How can we be sure in Dash that the government doesn't come, grab Ryan, put him into jail, and then basically Dash is done? How is there governance there? Also, another question I would have is, who do you report to? Like, could you get fired? If yes, by whom and how? Who would you have to report to? How can you not become the dictator and says, yeah, hey, we have a decentralized system, but actually Ryan is the dictator in the background? So what are the checks and balances? How does the government work there? Would love to explore that a bit.
Yeah, Dash was really one of the early innovators in governance, and we placed a high value on it very early on. Our governance system was deployed back in 2015, actually, and was
so still back in the dark coin era, basically. Or
that's right.
On the rebrand?
No, we were already Dash by that point, by mid 2015. It started with a simple voting system where anyone could put a proposal up and vote yes, no, or abstain. And it evolved into a self-funding governance system that allowed a portion of the block reward to be allocated out to various projects. It was designed intentionally to be decentralized, to ensure that no one entity controlled that funding. And the way that it works is anyone is free to put a proposal up to the Dash network for funding. The network itself votes on that. The masternodes specifically, each masternode gets one vote. And based on the outcome of that vote, there is a monthly budget cycle, and that monthly budget is paid out in what's called a super block. Now that in and of itself is very innovative. It has allowed the network to fund multiple teams. We've got multiple wallets that are being developed, including Dash Electrum wallet, Dash Masternode tool wallet that has tools specifically for masternodes. We've got payment applications that have been developed, a bunch of teams that do adoption efforts in Venezuela, Colombia. There in Germany, we have a team. And so there's various teams across the globe that are funded. Dash Core Group has no special status there. To be clear, Dash itself, the network, has no CEO. I am CEO of one team. It's a very important team. We do most of the protocol development and most of the technology development. But I am the CEO of one team that services the Dash decentralized organization. We
So also
wanted.
you need to apply, right? As far as I understand, your group basically needs to apply for the salary, and masternodes have to vote on that, right? As far as
That's right.
Mhm.
Every single period, we have to earn the votes necessary in order to receive a payment. Our proposals have a very high success rate, but they are not universally accepted. There are quite a number of proposals in the past that have failed from Dash Core Group. And we receive anywhere between 50 and 60% of the available funding. So we have a pretty large team, and developers aren't cheap. So, we've got a pretty sizable portion of the budget.
How many people do you guys have in core?
We've got around 40, 45 right now.
Wow.
That's down from a peak of around 60 during the bull run. We never went wild with hiring a bunch of people. And we've
They're
also
all located in Arizona, or are they, where are they based?
No, all over the world. We've got people in probably around 20 countries, I would guess.
Wow.
And so very physically distributed across all time zones. And so we've got a combination of good coverage and really pull the best talent we can from anywhere in the world. Dash Core Group itself is actually a C corporation. You said it's an LLC, but it's actually a C corporation.
Sorry. Yeah.
We changed the structure from the foundation to the C corporation because nonprofits have certain rules associated with them. You have to identify who your donors are. Well, in the case of the Dash Network, who are the individuals or entities that donated that funding to us? It also restricted what you could spend the money on. And so we weren't allowed to work on Dash specific items. Well, that's pretty problematic. We're here to serve Dash. And so we thought that a C corporation was a more appropriate structure. It gave us the flexibility we needed. But the problem with a C corporation is you need an owner. And we wanted to be able to build up reserves so that we could hire people and have certainty that we'd be able to keep them employed, and really allow for planning. Well, who can you entrust with that? I wasn't very comfortable being the owner of a corporation. And who do you issue those shares to? Well, the answer we came up with is a trust. We set up a New Zealand trust. We issued all of the shares, 100% of the shares in Dash Core Group, to the trust. And the trust beneficiaries are the network itself. It's the closest thing we could set up to being network owned.
Oh, that's cool. Why New Zealand?
It has very trusted and established trust law. It also has a large number of providers that will provide trustee services. And so it gives us flexibility in terms of who we hire as a trustee to oversee the trust. And so it was just a good place for trust services. And it's well respected. I can approach regulators and I'm not saying, well, I'm located in Isle of Man. Well, that doesn't have good optics to it.
True.
But New Zealand is very well respected. So that's the reason that we chose it. The trust supervisors are elected by the masternodes themselves in an annual election. There's 6 of them. We just went through our first election early this year, and they have the right to vote those shares. And just like any corporation owner, they have the right to fire and establish my board. That board has the right to fire me if I'm not doing my job. The network also has the ability to defund Dash Core Group at any time. Ultimately, if a country were to come in and prohibit the operation of Dash Core Group Inc. or do anything of the sort, shut it down, prohibit it from issuing any new software or what have you, the network should defund it. Stop spending money on that entity. An anonymous group of developers would probably show up the very next day
Sure.
under new screen names and say, hey, I'll service the network. Here's my payment address.
Mm.
And so I don't think that there's anything really that could happen that would stop the development of Dash. It might cause some disruption for a couple of months while members of the community regrouped under some new formation, but ultimately it is decentralized. There is no central point of failure. You can't simply, come and arrest me and expect everything to just fall apart. That isn't going to happen. And I'm not arrogant enough to believe that that would affect the network in any way. If I disappeared tomorrow, nothing would happen.
Sounds really solid. Like, it sounds really, really solid. Like, if I compare this to like a lot of the other coins, right? Either you have complete corporate interests or industry interests who can really manipulate and push a coin in a certain direction, or you have literally anarchy where there's nothing and people just stifled. I've always been impressed with how you guys have set this up. Who had all this foresight and who was kind of structuring it this way? Was this also a bit along the way? How did this all came along?
I think that Evan was the one who pulled it all together. Evan Duffield, the founder. But he had a lot of counsel from a lot of different sources. I've spoken to a number of people who all claim to have come up with the same basic set of ideas at around the same time. But I think what it was Evan was kind of in the center, collecting and sharing ideas and building on them, and everyone felt a part of that process. I felt a part of that process. Fernando Gutierrez, our current chief marketing officer, felt a part of that process. Quantum Explorer, one of our mobile developers, he was intimately involved in that process. And so I think there was just a coming together of a bunch of minds to try and set something up that addressed all of these issues, and really made a coin that was both decentralized but had the authority to anoint a group with the ability to go out and execute a cohesive strategy. And that's very different from decentralized and there's no decision-making authority anywhere in the entire system. And I think that there has to be a balance there. If you're going to be effective, you need a strategy around the technology, the product, the adoption, the markets that you're going to go after. All of that stuff needs to be part of a cohesive whole. And you can't get that with anarchy. You also can't have some central point of failure. At that point, you're becoming a security, and you face a whole different set of issues. And so I think finding the right balance was really key for Dash. And I think that how well set up it is has become evident over the years, because as we've faced regulators and as we've faced market maturity, we haven't had to make many changes, if any, to the way that the system was set up originally. And we're not considered a security, and we still are able to execute against a cohesive strategy. And so it's really interesting to see this evolve and see other projects dealing with governance issues that we've long since solved. And it's really fulfilling to see that play out.
Definitely. How have you approached, especially the privacy features? I mean, I've heard of other privacy coins being delisted on exchanges and in certain regulations. How does this? What has been the situation here at Dash so far, especially with Private Send?
Yeah, so Private Send was the first feature that was developed on top of the masternode layer of the network.
Yeah.
And what Private Send is, it's a branded implementation of CoinJoin, which is a privacy technique that requires no changes to Bitcoin's code base or no changes to the protocol itself.
Sure.
And Dash was first to market with that. It rolled out in 2014, The first CoinJoin implementation on Bitcoin was in 2015. I think it was Join Market was the first one. Since then, there's been other implementations of it. I think there are 6 or so different wallets of Bitcoin and Bitcoin Cash that support CoinJoin. And so there's really no effective difference in terms of like legal status between Bitcoin and Dash. But because Dash was first to market with this feature, it has been labeled a privacy-centric coin by the press.
Understand.
And regulators don't usually understand this technology well. Dash has no shielded addresses. It has no shielded transactions. Every transaction is fully transparent on the blockchain. There are no legally definable differences. And in fact, we conducted private send transactions on Bitcoin's blockchain. I published this on our blog post, and along with a
interesting.
Yeah, they're there, and you know, I could provide links after this that you could include in the YouTube.
Please, yeah, that would be interesting.
And people can take a look. We actually did private send transactions on Bitcoin's blockchain just to prove to regulators that there is no difference. The same analytics techniques that are used on Bitcoin can be applied to Dash. Dash is not accepted on any darknet market, at least not to my knowledge.
That is true. Yeah, that is definitely true. Yeah.
And
the reports on Dash in this area, they are completely negligible. So yeah.
Yeah. Less than 1% of all transactions on the network utilize private send. So it's not, you know, similar to Bitcoin. Coin mixing is not utilized all that often. And when it is, Chainalysis has come out with research recently that shows that almost all of the time, that is simply for privacy reasons. It's not to hide some nefarious purpose. And so regulators need to understand that there really is no difference between these. On top of that, Bitcoin has deployed the Lightning Network, which completely obscures those transactions off the blockchain completely.
Yeah.
And so to regulate Dash any differently than Bitcoin is already regulated is absolutely absurd. It's absurd. And when we educate regulators on this, it's not just regulators, it's banks that service the exchanges, it's the exchanges themselves. When we go through that education process, they quickly learn that there is no issue here, and you know, we've had that decision reversed. eToro is an example of this. Gibraltar approached eToro and said, you have to delist privacy coins, including Dash. And we went back to the regulator, showed them our evidence, and they reversed the decision. So this is an issue of, you know, privacy versus complete anonymity.
Yeah.
We do have a privacy feature. Does that make us an anonymous coin and subject to the regulations that apply there? No. We should have access to these markets, and we are winning that information battle.
But you have to admit that there was, like, you definitely shifted there a bit also in the branding, and you definitely shifted a bit in the communication. Because, like, especially at the beginning, I felt it was always, hey, we at Dash, we have this advantage over Bitcoin with our privacy features. And I think now it's more, okay, we really work on other things. At least that's my feeling over the past 3 to 4 years. Maybe my perception is wrong there, but.
No, it is true. I mean, we deployed a privacy feature that we feel is appropriate for the market. Going much further than we've gone requires technical compromises. It slows down the network. It increases the size of your blockchain. You know, Monero transactions are about 20 times the size of a Bitcoin transaction. And so, you know, you have to have the full blockchain in order to use it. So it's not usable on a phone. And so there's just compromises that we don't think are worth it from a user experience standpoint. We believe in privacy. We've provided a privacy feature.
Which is important. I'm a big fan of privacy. So I think it's important, right? Yeah.
Yeah, but overall, we're trying to enhance the usability of cryptocurrencies overall. Privacy is one aspect of it. So is fast transactions. So is low cost. So is a reliable network. So is ease of use. We're introducing usernames so that you never have to deal with cryptographic addresses again. I can just friend request you and I interact with your username on the network. I don't have to resend you a new address and verify it over the phone every time I want to transact with you. And so, you know, Dash has become much more than one feature. Yeah. It's become all of these features to create an overall better user experience. We're not abandoning privacy. We've really enhanced it to the point where it's as good as it can get on the current protocol. And I think that other projects have worked on this as well. Litecoin is implementing Mimblewimble. Well, when they roll that out, are they a privacy coin now? And so, arguably, Mimblewimble is, a trustless setup with shielded transactions. That would make it more anonymous than Dash. What will happen to it? And so this is really an education process that needs to take place. And I do believe in privacy. I also believe that the regulators need to treat us fairly for the technology that's there, not because some yo-yo put us in a privacy list 4 years ago. And so that's the battle that we're fighting right now. And luckily, every chance that we've had to address it, the regulator has seen it our way.
True. No, that's good. Great. Good that you mentioned that. I would still love to cover two key topics. The first one is some recent happenings in Venezuela. The other one is the DIF, the Dash Investment Fund. Let's start with Venezuela first. To me, there were two things there. First of all, I think there was something happening there with some transparency stuff. Dashwatch. I'm not 100% sure how I understood all this, so maybe you could kind of enlighten us. And then, what was this back and forth with CoinDesk? What happened there? These are two instances that I really would love to pick out because they did get some social media traction. I think a lot of people kind of started to talk about those things.
Sure. So there are a number of prominent projects that are working for Dash in Venezuela. In fact, there's about 26 different communities and projects across the country that are working towards the adoption of Dash in some capacity. One of those teams was a fairly prominent team called Dash Merchant Venezuela. And Dash Merchant Venezuela had about 20 different employees that were servicing merchants, onboarding them, and then answering questions, servicing their requests, making sure that they were up to date with the latest software, all of that type of stuff. And so they were really helping. Funded through the DAO, correct. Dashwatch is a separate entity funded through the DAO, and their job is to conduct audits on the various projects and reports on how those projects are delivering against their stated goals. At the community's request, several members of the community requested that Dash Merchant's financials be audited. And so Dashwatch undertook that. Dash Merchant shared information, and that information was not true. It was that they had allocated the information was how the salary was allocated across the team. In reality, the salaries were very low for the employees, and the management was taking the bulk of the salary portion of the proposal. And what they reported was a more even distribution. They got caught with this information being incorrect. Through other sources, Dashwatch was able to determine that the information was incorrect, and that screenshots of the information was falsified. That obviously caused a great deal of erosion in trust for the team. Mm-hmm. Now, those team members came back and said, we did not provide a truthful accounting because we fear for our safety in Venezuela. If anyone knew that we held a large amount of Dash, we would become targets. Mm-hmm. And that is the reason why we falsified this information. To me, that is a plausible explanation, but it nonetheless is very trust eroding to ask someone that and have them lie about it. It would have been far better if they would have come back with that explanation up front and said, I don't want to disclose this information. It could put members of my team at risk. But they didn't handle it that way. As a result, they were defunded. That
Wow.
team was defunded. Subsequent to that, there were allegations that they had falsified other information, like how many merchants they'd signed up. There was an audit done on that. And indeed, some of the merchants had stopped accepting Dash. The information wasn't always up to date. Sometimes only the owner could accept Dash, and if the owner wasn't present, they were unable to accept a Dash payment. There was merchant churn that hadn't been updated. New employees that came in that didn't know how to accept a Dash payment. And so there was a audit to kind of clean that information up and update the database. And as a result, a lot of those merchants did fall out of the listing. It doesn't appear to me that there was any type of fraud at that level. I think that the amount of churn that we saw was pretty normal when it comes to a payment method that is as infrequently used as Dash is compared with other payment methods at the point of sale. And so I think that, it was an unfortunate situation. It generated a lot of headlines
Yeah,
that
definitely. Yeah.
there's fraud and all of this, and it called into question all of the progress that we've made in Venezuela. The progress we've made in Venezuela is real. We see evidence of it growing constantly. We're managing to sign up larger and larger chains. We just signed our largest chain, 22 pharmacies in Caracas, and we're in negotiations with point of sale systems at this point. None of that work would be possible without Dash Merchant out there having built up
Mm.
a couple of thousand initial mom and pop type merchants. And so, I think that the work in Venezuela is going to continue. Actually, Dash Merchant Venezuela is now operating under new management. Those same employees are still out there servicing the merchants. The management had to leave the company, but the remaining workforce stayed behind, and the operations manager is continuing that work. And so I think it was an issue of some lost trust, and the network dealt with it appropriately, I think.
Yeah, it looks like it. And how does the CoinDesk article come in there about that there's, I don't know how they phrased it, but it was a very catchy headline, and there's no merchant in Venezuela or something. I think it was really, really extreme. Where does this come from, and where's the motivation behind CoinDesk? I mean, it's one thing to challenge a statement. It's another one to really go in that extreme kind of catchy headline.
Yeah, the headline was something to the effect of, despite claims by Dash Core Group CEO or Dash CEO, the Dash may not be the most used cryptocurrency in Venezuela. That implies that some other cryptocurrency is used more often than Dash.
Yeah.
No evidence was presented in the article to the contrary. The article was very biased. The author interviewed me and another team member, did not include any of our quotes, statistics, data. It was a poorly written article that was transparently biased. And I think the community came out against it very hard with disputing the facts in the article. It painted a very bleak picture, almost of fraud. And I stand by the statement that Dash is the most used cryptocurrency in Venezuela, certainly at the point of sale. It is unbelievable that they stood by the article. They made one tiny correction to it out of the dozens that we pointed out that were incorrect. The only evidence presented in the article was a quote from someone who said, I don't, we used to accept cryptocurrencies, but we don't anymore. Well, they don't accept any cryptocurrency. Yeah. So you found a shop that had stopped accepting them, and that's evidence that some other cryptocurrency is used more than Dash. It was an absurd article. And so I came out pretty hard against John Biggs, the editor, he then posted a screenshot. His author had dropped off the call, didn't call back in, didn't reply to my emails, didn't reply. I stayed on the call another 10 minutes, and he said, well, we did, your guy dropped the ball, and posted a screenshot of an email exchange in which his author had written to our PR agency. What he didn't share is that our PR agency had in fact responded, had offered to set up another call, and that their author had declined in a subsequent email. And so it's just a pattern of dishonesty here. And who they're discrediting is CoinDesk. They're not discrediting Dash.
Yeah.
And
what's the motivation behind it? I mean, Warren Buffett always says, show me someone's incentive and I'll show you their actions. Where's the motivation behind that?
Now we're entering the world of speculation. But I think the speculation that is out there is, well, CoinDesk is owned by Digital Currency Group. Dash is a competitor to Digital Currency Group's portfolio. Therefore, CoinDesk may have an incentive to discredit projects that are not in their parent company's portfolio. They claim to have independence from their ownership in terms of what they report and how they report it. I don't feel fairly treated as a project. CoinDesk rarely writes any article about Dash. When it does, it's negatively slanted. I saw the first fairly well-balanced article after that exchange with John Biggs, where an article was introduced about a week later, a short article that did not appear to be heavily biased one way or the other. And it's the first time I've ever seen that. I don't know if it's a result of the blowback that he got from the Dash community, but it really was a pattern that had extended out over years, and I'd really had enough. That's what triggered me to kind of go after him.
I was able to understand that, really. Yeah, I saw your frustration there. I was like, okay, Ryan really got triggered, so that's good.
At some point, you have to say something, because this is dishonest behavior.
Yeah.
Especially after your errors have been pointed out to you and you refuse to fix them. Sure. I find it deplorable.
Let's segue to a more positive topic. Talk about DIF. Talk about what this is all about. What's the status? How did this all come to be? Why did you kind of set all this up? What are the ideas behind it?
Well, Dash Investment Foundation is something that I had in mind for a long, long time to address one of the shortcomings with our proposal system. And our proposal system does fund great projects, but it doesn't always make sense, because what it is a grant. It's a grant of funds to integrate Dash or build something on top of the network. But oftentimes we're dealing with startups that have no customer base, no guarantee that that funding is going to result in anything of value to the Dash network. And in situations like that, in which there's really high risk, it doesn't make much sense to give someone a grant.
Yeah.
But it may make sense if there is, some recognition for that risk. And how that typically works in the world of venture capital is equity shares. Well, how does the network own equity shares? That's a really difficult problem to solve. We did it through a legal structure. What the Dash Investment Foundation is it is a foundation set up in the Cayman Islands. And it's a new type of foundation that didn't exist even 2 years ago. It's called a foundation established after formation, something to that effect. And what it is the It is a memberless and ownerless entity. Unlike normal foundations that have members and membership, there's no one who owns this entity at all. And you basically do it by forming the foundation, and then the sole member relinquishes their membership. And in so doing, you've got kind of this entity that's floating off on its own. This entity can control assets, debt, securities, notes, anything of value. It can own gold, it can own anything. And what we did was we set it up so that the supervisors for that foundation were, again, elected by the network. And so it is a memberless, ownerless investment fund that can make investments on behalf of the DAO, or can take ownership of a proposal owner's equity if a proposal is funded. And so it can accumulate assets that are there to benefit the network. If a particular investment fails, obviously they write that off. If another investment succeeds wildly and is worth hundreds of millions of dollars someday, they can liquidate that and redeploy that funding for the benefit of the network.
Interesting.
And so it really allows a more efficient allocation of the proposal funding and allows the network to get more out of the funding that it provides.
And how does the funding go into the first place? They also have to make a proposal to the DAO and then they fund it, or how does that work?
There's multiple mechanisms. The Dash Investment Foundation can enter into a contract with a proposal owner that says, if your proposal for 100 Dash is funded in the month of July, you will issue 10% of the shares in your company to the Dash Investment Foundation. And that contract can be shared with the masternode owners as part of their proposal. Another mechanism can be a direct investment into the Dash Investment Foundation. So the Dash Investment Foundation could put a proposal up to the DAO to get some funding to go out and make some initial investments. And they could make the investment allocation decision themselves through an application process. It's really up to the masternode owners to elect supervisors that will institute processes that they're happy with, or do a good enough job of allocating the available funding out on their own. Ultimately, when funding comes back in, one of the problems that we had is, well, how do we distribute those gains out to the masternodes or to the network as a whole? Any distribution, any traditional distribution, would require collecting everyone's know your customer data and everyone's self-reporting in order to be eligible to get a share of that. That would be a very cumbersome process. It also is a process that a lot of people probably wouldn't be willing to go through. And so we came up with a solution. The Dash Investment Foundation can simply buy Dash on the open market and destroy it.
Oh, wow.
And effectively, that reduces the circulating supply of Dash, and it boosts the value of the Dash that everyone holds.
Mm-hmm.
And so, in effect, I get a distribution, but not really. You know, it's not something that
How does the destruction work? Is that being sent to an address that's clearly not, where no one clearly has a private key to, or how does the destruction work?
Yeah, you can do it a couple different ways. There's particular op return fields, I believe, that will destroy the funds as far as the network is concerned. You can also set up an address that clearly does not have a private key associated with it, you know, destroy Dash here, and then a bunch of random characters. You know, there are ways to do it. You know, I think that problem has been well solved. There are ways to destroy coins. Basically, this approach has tax advantages too. Rather than receiving a dividend or something like that is instantly taxable, it's a lot more like a share buyback. My shares may appreciate, but until I sell them, there is no taxable event there. And so it's much simpler for people from a tax perspective to keep track of their capital gains and losses, which they have to do anyway today,
Yep.
rather than, also having a dividend coming in every quarter on top of that. So I think we solved multiple problems with the approach that we took. It's really innovative. I believe it is the first ownerless and memberless investment fund in the world. All of the other foundations that have been set up under this method are usually for, purposes of charity or something along those lines. So it's really a world first, and it's very innovative. It solves all of our problems, and as far as what we were trying to address, and hopefully it makes the entire proposal system more efficient. They're very close to getting that process set up, and a website set up was the last report that I saw on that, and they should be up and operational very soon.
Wow, it's really, really cool. I'm excited to see that. That's cool.
Yeah.
Ryan, anything at the end that you would love to, that you feel we didn't cover that, the Dash community right now should know, or that they could be looking forward to? Anything that you kind of, want to point out here?
Well, I think we've covered a lot. I do think that there's a lot of innovation that's coming. We have a huge backlog of ideas. Our next major release is hitting testnet next quarter, and that'll introduce kind of these ease of use features that we talked about, as well as the ability to
names.
store, and store other data within the network, attach metadata to payments, all kinds of new features that we'll be rolling out, as well as the ability for developers to build apps on top of the Dash network and store the app data within the Dash network. So there's some really exciting stuff coming. And after that, we've got a whole backlog of things that we've got not yet into the roadmap, but getting closer. We're kind of iterating through what our next release might look like. So there's a lot to keep an eye on. And I think the next year is going to be a really interesting one.
Definitely. That's really cool. Maybe finishing on a personal touch, what do you do aside of Dash, aside of crypto? What's your hobbies? What do you do in your spare time? I don't know if people know about those things or whatever you want to share there.
Yeah, no, I have a lot of interest in reading about nonfiction topics. I read a lot about physics and astronomy.
Really? And me too. I love that.
I love it. It's solving some of the biggest mysteries in the universe and that type of thing. I like to read a lot about history, particularly American history.
Why is that? Just because you're curious, or because you think history rhymes, or what are the deeper reasons?
I think history rhymes, but I think that we're told narratives our entire lives that are not true. And when you really dig into it and dig into the stories of people, things always weren't presented to us the way that they actually happened. On my bookshelf is the Oxford History of America. And it takes up an entire bookshelf about, yay long. And I'm working my way through it. But I think when I finish that, I'm going to move on to a different region of the world and explore some other histories. But certainly the history of my own country is of great interest right now.
That's really cool. I love that. We definitely need to catch up on that somehow. I love, I'm a medical doctor. So for me, science, medicine, all these things have always been super exciting. So yeah, cool.
Yeah.
Great. Hey, Ryan.
Very good.
Thank you so much for spending the time with the community and answering all these questions. And and thank you in general, I think, for everything that you do. I feel there's a lot of value to the world in all the work you're doing. So thank you so much for that.
Oh, thank you for the compliment. That was a good one. I'll pocket that one right here.
Do it. Appreciate that.
Thank you.